Good afternoon, everybody. It's weird. We're here at 1:30, not 2:30. Silly Americans changing their clocks. How are we all doing? Afternoon, Mark. Afternoon, Youssef. Is there anybody else here? There's nobody here, look. There's 10 people in here. There's normally about 50 or 60. Nobody's here because they've completely forgotten that the clocks have changed. Anyway, I'll just talk to you. Afternoon, Brandon. Right, so... yeah, market's about open. Yeah, market's open now, actually. Market has just opened. I haven't updated the EA. Okay. So we'll see where the indices go. I'm not convinced the markets have opened. It's a very, very quiet open if they have. They have happened. So we'll have a look at the indices this afternoon. We'll have a look at the news, usual stuff. Have a look at what's going on with FX and with the... trade tariffs. It's virtually impossible to keep up. It's just red news flooding everything, just so much red constantly every 5 minutes. Yesterday we had 25% tariffs extra going on Canada and Mexico. Within 5 hours they were removed. I mean, it's just there it is on the chart, look. It's just painful and impossible to trade this market at the minute because it's in utter chaos. I've never seen anything like it. Well, I have seen something like it. It was called COVID, and we knew why that was happening. This is something else. Obviously, the stock indices are being absolutely destroyed at the moment, as we know. They are all over the place. NASDAQ... I mean, poor old Elon Musk. I feel sorry for him, haven't you, having that much wiped off of his wealth. Yeah, I mean, NASDAQ tells the story of what the hell's going on at the moment, which is utter chaos. So we'll see what happens today. We've got 15 minutes. We've got the rate announcement for the Canadian dollar. So we're expecting this to drop. I'm assuming they are going to drop it still. I mean... when we got that forecast, the world was a completely different place. It was a different place on Monday. But we're assuming we're going to get that Canadian rate drop. What that's going to do to the Canadian dollar, I have no idea. The Canadians don't know what's going to happen to the Canadian dollar. So we'll see what's going to happen. It's literally what it is at the moment. Watch. Every day you wake up and it's like, what's happened overnight? Holy crap. Within 10 minutes, something else has happened. Then something else happens. Yeah. And as soon as Putin rejects the peace talks, then what's going to happen? Who knows? Because he ain't going to accept them, is he? Afternoon, John. Johan even. We are here. Good. Finally, Euro odd. Yep. You know why Euro odds dropped, don't you? Because I got out. I told you. Every time I pull the plug on a position, within 24 hours, that move starts. Every time. Literally. It's almost like clockwork. If ever you see me take a large loss, do exactly what I was trying to do at the beginning, and you will make money. Every time. Every time. So I got out Euro odd yesterday, took a hit on that. I got out of Euro CAD yesterday, took a hit on that. We just got reversal alerts on the hourly chart. So, yeah, good luck to everybody that's still in them. Oh, hang on. There's David here. David's here. I know David's here because I've just seen a tip come in. Morning, monkey. Afternoon, even. Let me just catch up on the chat. Afternoon, it's time. Hello, all. Have a wonderful rest of your day. Hello, Ari. David, bless you, our friend. May the YouTube demons stay away from the goat. That's an interesting one. YouTube demons? God, what are the YouTube demons? I don't like horror films. I don't want to know what the YouTube demons are. Thank you very much for the tip, David. I very much appreciate it, and I very much need it at the moment. Because these markets are killing me at the minute. But anyway, that can all change this afternoon. Literally. One 200 ADR move, and I will get back 50% of my losses this month. One 200 ADR move in the direction. That's all we need. Thank you, David. Much appreciated. Peter, afternoon. Yusuf, I was going to ask you about your positions. What? I'll go through those in a sec. Afternoon, Ace, Noob, great Phil. Right, so indices. I've dropped down onto low time frames at the moment, trading indices. I'm absolutely killing it on the stock indexes at the minute. Oh, sorry, I got a test running. Sorry, let me just quickly finish this test. So for those of you that weren't in the members stream yesterday, this is the release candidate for ORB V2, which I completed yesterday morning because we did it in the live stream, so I actually did it. And it's on live test now. And this is my final back tests to check functionality. So I'm just making sure it's doing what it should be doing, changing lot size as it should be changing lot size, doing everything it needs to do, basically. So this, I think I will be able to release this week. This week, maybe, if not early next week. But I just need to check a few things on it. Live testing, basically. So I've got it running live testing here. It's what I've been using, basically, for the last couple of weeks anyway. But I've been using the development version, which this is the development version, which got a load of crap all over the chart. Ignore all that. But I just need to check it's actually doing this correctly. So I just need to check this every 5 minutes for the first 15 minutes of the open. But yeah, very, very, very good. I've made some amendments since yesterday for those in the members stream. It's now able to trade on fixed money risk and percentage risk. I just want to check. 3, 4. That should end up about 3. Oh, more than I thought. Anyway, okay. So I just need to quickly run a test on this. Ignore me. Just want to run that on 1%. I'm hoping this will double the account. This is a 12-month test, so we'll leave that running and see if that doubles the account. We'll tune into that in a second. Thank you for getting out the euro, as I asked you, from 40% to 7%. Good job, Peter. So yeah, I don't know what to say to that. It happens every time. It is like clockwork. It is like clockwork. When I exit, when I pull the plug, it always goes. So you can expect this down here either today, tomorrow, or Friday. Because I'm out. Will that be publicly available? Yep. It's an update, basically, David. So what this is ORB version 2. So this is the standard opening range breakout EA that has been out for ages, and I've been using for ages. But I've completely rebuilt the logic in there so that it's a lot simpler. So basically, the new version, I can't show you the inputs at the moment. Look at that. 2.5K account sitting at 5 now. So basically what this is, actually I can show you the inputs. No, I can't. I'll show you in a second. But what I've done basically is I've taken all the complexity out of the opening range breakout strategy to simplify it. So one of the main problems with ORB was 1-digit broker, 2-digit broker. Look at that, 6.1K out of a 2.5 grand account in a year. That's using hardly any risk as well. So basically, the new version is much, much, much simplified. It uses the logic of the SIH. Sorry, I just need to quickly check how long we got left on this candle. 2 minutes. I need to come back to this candle in 2 minutes. Remind me. So basically, you've got the range sizing logic, which is dynamic based on ADR that the SIHEA has. So it's the improved range size logic from Stock Index Hedge is now in here. It now allows you to trade 4 different ranges. A 5-minute range, a 10-minute range, a 15-minute range, and a 30-minute range. You do not have to trade them at 5 the 5-minute ORB, the 10-minute, the 15. If you want to change these to other times, you can do what you like with it. So it's more flexible with the timings, and you've got 4 of them now. I won't go into that because that's my secret sauce. This is basically an enhanced loss recovery logic, which I will cover at some point, but not now. You can risk a percentage of balance or an amount of money, and you can now use a lot multiplication system. So it will take lot multiplication into account as well. So you can use lot multipliers, and if you want to, great for prop. You have a maximum lot size allocation as well, so that it won't go nuts, obviously, so it stops martingale basically. You've got stop loss and take profit based on percentage of ADR, not percentage of range. So this uses ADR instead of range. And you have trailing stops, which use percentage of ADR as well. And you also now have a partial profit system. So it will close out a percentage of the trade for you at an ADR variable. So if, for example, you wanted to take a range which was 10 to 20% of ADR, have your TP set at 5 ADR or 50% of ADR, you could have a partial profit at 30% and then kick a trailing stop in, which is 20%. Yeah, so it will allow you to basically be as flexible as you want with the ORB. You can trail as you want, you can take partials as you want, you can do everything you want. Okay, second range, that's good. And it's trading second range. Second range is too tight. Min 2665, perfect. Okay, perfect. Cool. Yeah, it does partial profits. You've also now got liquidation targets in there as well, which are checked on a time basis. So this was in the original ORB, which basically means you can set a profit target and a loss target for the day, and it will check every 5, 10, 15 minutes, every hour, whatever you want, and it will just auto close and liquidate your positions. Great for prop, obviously. End of day exit. You need an end of day exit. And then it's got a dashboard. That's it. So there's no having to input anything based on pips, whether you've got a 1-digit broker, 2-digit broker, all that crap that was very complicated to set up is gone. So everything now works on an ADR basis. So it basically takes ADR 10, or you can adjust the ADR. I've put a different input in there for ADR if you want to change it, but ADR 10 is fine. And basically it will use ADR for everything, so you don't have to worry about setting it up. So the only thing you need to do with this basically is stick it on your chart and say, I want to trade the 5, 10, 15-minute ORB and the 30-minute ORB. If you want that to be the 60-minute ORB, you basically set it to 1730. I'm going to change this so it doesn't say M5, M10, M15 and M30. It's going to say range 1, range 2, range 3, range 4. The thing that you've got to bear into mind is that checks 5-minute range, that checks a 10-minute, that checks a 15-minute, and that checks a 30-minute range. So again, there'll be a manual. So yeah, it's a replacement basically. Three minutes. Just want to check the third range goes in okay here. So short on the Dow. That's the only trade on at the moment. There was no trades this morning on DAX or the FTSE. Dow's broken short. Nasdaq, S&P is breaking short, and Nasdaq is in inside range at the moment. Nice clean break on the Dow. I'm in a loss recovery on the DAX as well at the moment, and I'm hedged on the FTSE from this morning. So this is the SIH. This is getting the next update as well. SIH is absolutely killing it at the moment. Today is potentially going to be the first loss day. Maybe. We'll see. At the moment, haven't had a losing day for quite a long time on SIH. but it's been a bit of a choppy one today, so we'll see what happens with that. Right, let me just catch up on the chat. I just need to watch this candle close and then we'll get on with stuff. Afternoon, Neo. I have the ORBA, just haven't been able to learn the new inputs. The new inputs? Oh, the old inputs. Yeah, so the new one will be so much easier. And it's so much better as well. It's a much better strategy as well. I've done a load of back testing on it, and which again I've been doing in the members streams, but there's I wouldn't say nothing's bulletproof, but if you look at the equity curve, okay, so sorry, one sec. Okay, so that hasn't drawn third range because we've got a trade on. That has drawn third range and we're taking it because we didn't have a trade on. That has drawn third range. We're not taking it because the range is incorrect. It all works. What a day as well. It's every single example I wanted to see today. Absolutely spot on. So that one took the second range because the second range was in the Goldilocks zone. That one is taking the third range because the second one wasn't. And that one isn't trading at the moment because the range is too tight. It all works. And these two didn't trade this morning because the ranges were too big. Brilliant. That is the best testing day I could have asked for. Oh, I'm so chuffed with that. Right. That's done. I've tested. If these markets have taught me anything, it's to diversify. Yeah. Not put all your eggs in one basket. Yeah. I never have my eggs in one basket. I've had a lot of eggs in position trading for a long time, and it's paid me extremely well. This month is an absolute shit show. I'm down somewhere in the region of 30k, 35k this month. Never had a loss like it. I'm not sure that I will again, to be honest, because this is just I hate using I've said before today, I hate using the word unprecedented, but it is. It's something we've not seen before. COVID was something unprecedented. We've not seen a pandemic before. Yeah, we haven't had one since. We hadn't had one before. We haven't seen a president come in and completely destroy the world economics as we know it. We've had it. You can't predict this sort of stuff. There's nobody on the planet in Wall Street right now going, I knew Trump was going to do that. There are pension funds issuing warnings about pension collapse, basically. Most pension funds will have somewhere in the region of 20 to 40% exposure to the stock market. Can you imagine wherever your pension fund is right now having 40% wiped off of it in a week? That's what's happening. Again, we haven't seen this since 2020 in March. COVID. This is the biggest, fastest drop. And we don't know if this is over yet. So diversification shows you one thing. When one thing is working, another thing isn't. Position trading at the moment is absolutely killing me. This is opening range breakout strategy, up 12k. This is SIH strategy, up 6k. So there's 18k of profit there on those two accounts. I have another account as well, which is absolutely milking it. But position trading won't. So when mean reversion doesn't work, breakout does. Trend does. When trend doesn't work, breakout doesn't work, mean reversion does. As long as you've got mean reversion and or breakout stroke trend in your portfolio, you're bulletproof, because it doesn't matter what the markets do, and they work in confluence, don't they? We know that they all go together. Yeah. So if everything is going holy crap together, one of your strategies is going to be making a hell of a lot of money. At the moment, SIH, ORB, absolutely killing it. Position trading, mean reversion, dead. Anybody, if you think anybody as well, there's a lot of people I've seen on streams, not so much streams, but on streams and social in the last week, trying to catch this on the way down. and absolutely being destroyed. The amount of prop firm accounts that will have gone in the last 2 weeks, the prop firms must be sitting there going, oh, please keep collapsing, because these guys just keep buying the crap out of it and dying. Yeah. Anybody that sold it up here, laughing. But no one's holding it, are they? Banks and institutions, maybe, but no retailers are holding that, are they? But is this the bounce? We'll wait and see. It could be the bounce today that we've been waiting for. We'll have to wait and see what happens. Right. What's the strategy that makes it different from the original ORB? So the main difference is in the way that it's not, well, it is different and it's not different. The main difference between the new version and the old version, or if you like, is in the old version you had what was called continuous mode. And continuous, I think I've got it on here. No. Oh my God. Yeah. No, that's the old one. New one. I haven't got no version of the old one. But the old version of the ORB basically had what was called continuous mode. So basically what it would do is it would take the range, find the range. The range wasn't dynamic, so it didn't adjust dynamically with price action and volatility. This one does. So that's one of the main differences. Is intelligent for a start. It goes, holy crap, the markets are nuts. Let's not use that tiny little range that he's asked me to use. Let's use a proper range that's based on volatility. So it uses volatility and volume to determine range for a start. It had continuous mode, which meant that what it would do is it would try and take a 5-minute range break. If that failed and it closed back inside the range, it would reposition itself at the 5-minute range and try and take it again, or the 10 or the 15 or whichever one you were trading. So what it would do in effect is if you get a market like this, which goes into a D-shaped rotation for the day, you would get absolutely destroyed. It would just keep hemorrhaging cash unless you set that maximum loss limit, which this one obviously also has. But the way this works is it determines the range, it measures the range. If the range is outside of the norm, i.e. too small or too big, it won't take that range. So if you say I want to take the 5-minute, the 10-minute, the 15-minute and the 30-minute opening ranges, what it's doing here is it's saying I'll try all of them. So if the 5 is no good, it will wait. If the 10-minute range is inside the 5-minute range, it's still not going to be any good. It will wait. If the 15-minute is inside the 5 and the 10, it will wait. It will wait for the 30-minute range, which is the initial balance, to be formed, and then it will trade the initial balance range. So it's more intelligent. Also, it won't continuously try to get in. If it takes a 5-minute ORB long and stops out, and then takes a 10-minute ORB short and stops out, the 15-minute range isn't right, it won't trade. So what it does is it stops trading if the market conditions are wrong. So if it finds it can't get a breakout that way, it can't get a breakout that way, and then we sit around and do this, it will just sit there and go, I'll try tomorrow. So it's clever. Whereas the original ORB was more of a blunt instrument. This one's a little bit more logical in the way, well, a lot more logical in the way that it works. The other difference is obviously you've got partials and other things in here, but in essence, really, the main difference is it's using dynamic ranges, which is the advantage that SIH has, the stock index hedge strategy, which is this one that I trade, and I have been trading, a lot. This is what I normally trade. I don't trade the ORB because I get frustrated with being stopped out constantly. So it wasn't for me, but the new ORB version is obviously a lot better. So that's the main difference. It's just better, basically, I think is the thing. Bank of Canada rate came out as forecast, 2.75. So not an inkling, look. How's that for a rate announcement? Dead. Not interested. Look, market just not interested in that at all. Wow. I've never seen an interest rate announcement, regardless of whether the result is expected or not, come out with that much price action. Unbelievable, isn't it? This is not the same world. We are not living in the same world now for trading. This is a new world order we are witnessing unfolding here, and it's absolutely balmy. But anyway, we will see. Afternoon, Praetorian. Chris, on my YouTube, popping up plenty gurus saying they made a fortune riding the south moves. Yeah, they will do, but none of them live. They're all posting videos 2 days later. Yeah. And here's me in here going, I got absolutely crucified by this. But that's what happened. Yeah. I can make a video saying that I bought it here and I rode it all the way up to there and I just got out. And these red lines are my profit. Some people will believe that. I don't know. But that's not what I do. I tell it like it is. I live in the real world where I have to pay my mortgage. That's going to be tricky. Last question. So if I purchased the ORB back in the day in the MQL5 marketplace, we'll be able to update? Yes, to version 2. Yeah. So basically, obviously everything that I do EA-wise now, you can buy direct from the website from me. I license it myself. I also now have a demo downloads and a 7-day trial. So if you want to download all of the EAs and get a demo for the strategy tester, you can do it from the website now rather than from the MQL5 marketplace. And today, bear with me if you do this, it may work, it may not. There is now a 7-day trial. So basically, when you click that button, you will get taken to a page to fill out your license details, and I'll set you up a 7-day license. I do it manually, so it's not automated. So you have to wait half an hour or so. And if I'm in a live stream, you'll have to wait until the live stream's finished. But you just need to provide your account name and number as shown in your brokerage and your whatever you want, whichever EA you want to use. And I'll get a license set up for 7 days so you can live trial it. So if you want to try the SIH or the ORB strategies out on a demo account and actually live trade it rather than just strategy tester, you can do that for 7 days. So that's new on the site as well. But if you have bought anything, any of my EAs from the marketplace, I'm still pushing all updates out onto the marketplace, and I'm updating them here myself. Any new EAs I release, if I do, will not be pushed onto the marketplace. I'm going to keep them here because the marketplace is being so problematic for people. Just doing it myself. Purchase your ADR indicator. Do you think ADR 5 or 10 is better? There's a video on that, right? Called which ADR is best? And there they are. There's all the ADRs. Go watch that. So rather than give you a 22-minute answer, watch the 22-minute answer at your leisure. There is no best, there's different. Right, so let's go through the FX side of things. Let me just quickly see what's going on with this DAX, because I'm just conscious. I'm in a hedge recovery on this, which I want to keep a bit of an eye on. So I'm hedged on the NASDAQ, aren't I? Tricky day today. Really, very whippy today. Both opens have been a little bit whippy today, apart from the Dow. I'm just watching this. For those using SIH, I'm trialing a new variation of the strategy. As you can see here, we had a hedge this morning on the DAX. I took TP at 2R today. Tried to get out at 2R. It was a very risky exit. So what I did was, when it took the hedge recovery, I put a stop loss on. So I think what I'm going to do for the days where we get those big moves, we get to 5R and people don't re-hedge. I had the recommendation, and I've tried it before as well, of just re-hedging, which I've done plenty of times, to lock in those hedges. I'm going to trial using a stop loss instead of a hedge. So this is what I've been doing basically. And as you can see, what it does is it just gives you more loss on the day, because you're taking a couple of losses as well as that profit. But what it means is it automatically tries to get you in with a new hedge recovery at a better price each time. So I'm going to reprogram SIH to have this logic placed so that you can leave it completely unattended and not worry about getting into a squeeze of 200 ADR or something without having to deal with it manually. So just so you know, that's on my books as the next thing to do, basically, after I've got the ORBEA done. And it seems to be working very well. So I'm going to backtest it. Right, FX. So basically yesterday's news, obviously we've had the Canadian news, we've had the CPI. The reason I'm not focusing too much on this at the moment is because it means absolutely nothing. None of this stuff means anything at the moment because it's all about financial juice and when Trump makes a noise like this. So we've had the CPI number for the US dollar, which has just come out. Here we go. I can't keep up. Honestly, can't keep up. So the CPI number came out lower than forecast. We were forecasting CPI to drop, and it actually dropped further than expected. So CPI has come down more, meaning that the Fed, in effect, can reduce rates faster. The 2.8 on a 2.9 forecast is fantastic. So it means that that should weaken the US dollar, basically, because in a normal world, when inflation comes down, interest rates drop. When interest rates drop, currencies rally. Yeah, or currencies rather tend to come down. So what we're seeing with that news at the moment, as you can see here, is very little. Because it doesn't really matter what inflation is, because the Fed do not know what to do with interest rates, because they have no idea what is going to happen with the economy, because the economy is driven by business. Business hasn't got a bloody clue what it's paying for any of its raw materials. Therefore, it cannot forecast what it's going to charge people. Therefore, we do not know what inflation is going to be. Therefore, the Fed have no way of determining interest rates in the future. And they came out and said that pretty much day before yesterday. So here we go. The Fed are now seeing resuming interest rate cuts in July versus June earlier, based on short-term interest rate futures prices. So at the moment, today, this afternoon, that is what they are planning. In an hour's time, Trump may well have said something different, or in this case, Canada come out and say something different about how they're going to beat the US up and make them pay more, which means that that won't be relevant anymore. So none of the news that we see forecast here, whether it be red or green or what, is going to make any difference to long-term price action. So at the minute, it's just doing what the hell it likes based on what's going on with the trumpet, as I'm going to start calling him. So overnight, obviously, we've had new tariffs going in yesterday, then not, then again. It was going to be 0.75 potentially, then 0.5. What we actually got was 0.25, which makes it 0.5, I think. I'm losing track because it changes every 5 hours. But at the end of the day, what he's done is he's put worldwide import tariffs on aluminium and steel, which means that every country in the world that manufactures and imports to the US have just had their prices hiked. So therefore, every country that manufactures and imports to the US has to now hike their prices by the same price as they've had theirs hiked at. Canada, it looks like, have just, let's just quickly read up what's gone on. We are warning signs that heightening trade tensions could disrupt jobs and market recovery, which will probably freeze interest rates. rate decision. So 2.75. We probably won't go below 2.75. I wouldn't imagine for the CAD moving forward. Not that that means anything, but Putin likely to eventually agree to the truce, but on his own terms. So he's going to ignore everything. We kind of knew that. Canada to put tariffs on US steel and aluminium in new measures. Fed are now saying da-da-da. I've seen that one. Canada minister. Canada will impose 25% retaliatory tariffs on US goods worth $29.8 billion from March the 13th. Tomorrow. So Canada are now putting another 25% on tomorrow. So we'll see what Trump does tomorrow afternoon after those have been hit, which is probably going to be another 25. So all you're going to see here is this thing going absolutely balmy because it has no way of knowing what to do. So what I think banks and institutions at the moment seem to be doing is pulling everything out the stock market, because obviously there's no business on the planet at the moment that is not going to be impacted by, and I mean on the planet, anywhere in the world, there's no business that's going to be not going to be impacted by this. So you do not want your money in stocks, because you do not know which businesses are going to benefit and which businesses are going to get absolutely destroyed by these tariffs. Economics is what drives fundamental pricing structures in Forex. So basically, countries that are doing well tend to do that. Countries that are doing bad tend to do that. That's the way it normally works. What is that going to do and that going to do in the next month, week, 3 months, 6 months, year? Nobody can forecast now. There is no way of forecasting economic growth or decline in any currency, because we cannot forecast anything at the minute. So all you're seeing at the moment here is completely and utterly useless news and volatility coming into the market. We've seen what's happened with the euro. Now, obviously, this looks like it could be a lovely start of a bear move. We had a reversal alert there. We had a reversal alert there. We've got a reversal alert here. Is it? I don't know. It could well be, because I'm out. So it probably is. But you cannot forecast which way this thing's going to go, because they're going to change that news every day. So at the minute, position trading strategy, I'd say position trading strategy, virtually any strategy out there that uses mean reversion is not useless, but very, 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 very hard to make work, because there's no long-term speculation you can use to say that what has happened in the past with the way that banks and institutions invest money and make money is going to be possible in the future. So the movement that we've been used to in the markets may well turn into that. It could turn into that for 6 months to a year, because someone is going to benefit and someone is going to get completely destroyed. Or it could do anything. Yeah, we just don't know. So right now, I'm switching over to breakout-based strategy, because breakout-based strategy in a volatile market is always going to work. If you look at the volatility index, whenever you have the volatility index rising, what it means is that we're getting larger price movements. If you're trading ranges based on average ranges, average daily ranges, or any kind of ATR over hourly or 4-hourly charts, when those movements start, you will make money on breakouts. Yeah. If you try and mean revert the breakout, it could go on for days or weeks, as we can see now with some of these moves. So intraday, 5-minute, 15-minute charts, if you're measuring volatility breakouts on those sorts of time frames, you're going to do very well, a la ORB. Yeah. So any kind of strategy like this, when you're getting parabolic intraday movement like this, it's just going to work, because it cannot fail. It can get stopped out, obviously, but it can't fail to have these big, strong moves. So as long as you're using risk correctly intraday with stops on a breakout strategy, that's really the kind of way that you need to be sort of going, in my opinion, at the moment. So I'm just going to... I'll just lock in that in because it's just taken a loss. So for me at the minute with FX, I don't trade intraday on FX because normally the price action is choppy on 5-minute time frames. I can't really show you anything at the moment that is normal. So, but normally you'll find price action is very choppy intraday, and there's no timing on it. So, the best way to trade at the minute for me is indices. Because we know when the movements are coming and we can see what's going on in the stock markets at the moment. They're collapsing at a rate of knots. So it's very easy to make money with that type of strategy. For position trading moving forward, I was asked this morning by someone, is it still viable? Yes, it is still viable. But when? I don't know. It's viable right now. If this comes down to here, which is what, or even return to kind of origin of move, 61.8 retracement, it's still viable. Yeah, as long as the market is moving up and down, position trading will work. What isn't the same at the moment with a position trading strategy is risk. So what I have fallen foul of this particular cycle is basically euro going absolutely crazy and having too much exposure. So for those of you who've been in here for a while, you know that I switched over to using swaps because I was getting killed towards the latter part of last year with swap fees because I was holding things long term and obviously paying very large swaps. So I've fallen in line with swaps at the exact point that the market has fallen out of love with it, because we no longer have a yen carry trade, which was swap dependent. And the market has absolutely no reason to try and trade in line with swaps anymore because the fundamentals have shifted. Yeah. So these are based on interest rates. So normally the market would move in line with interest rate moves. We're not moving in line with interest rate moves anymore. So therefore this thing is pointless. So it's just one of those things where the whole sort of fundamentals, if you like, of how the market moves have altered. So I'm going to carry on position trading. I've reset the EAs on the VPS to basically just drop the risk right down. So any new positions are going to be taken with a I think I've gone 0.15 risk and 3/4 of an ADR spacing, basically. And tight drawdown control. This has already got tight drawdown control on it, but six trade max, which is what I was using before. But basically what I've done is I've adjusted the strategy, if you like, to mean that it's got to move 6 ADR before I start getting into trouble. So if you look at this move here as an example. First trade was there actually. That's 847 on a 150. So that's 150, 300, 600, 900. 900 is 6 ADR. So that basically is pretty much that move there. The whole move is more than that, but that was the initial entry there. So where I've had kind of 1, 2, 3, 4, 5, 6, 7 plus multiple drawdown control, aggressive drawdown control trades on within that distance, I've just basically widened everything out so that any kind of future moves like this will not be anywhere near as impactful. Yeah. So I've also limited exposure. Exposure is one of the key killers. So the main things that hinder position trading are spacing between trades, exposure, and risk, which is your initial lot size. So lot multiplication dropped right down to 1.1. Yeah, so risk is reduced. Exposure is reduced as well. So got rid of things like Aussie dollar, and New Zealand dollar against the euro. So it will only be trading one of those, euro odd or New Zealand, euro New Zealand, because obviously you'll see that the euro New Zealand and the euro odd, basically the charts look identical. Yeah, double exposure. So this loss that I took here on the euro odd, I'm also taking on the euro New Zealand. Yeah. So instead of a 5 to 10% drawdown, it's a 20% drawdown. Yeah, exposure. So it's just this move here has highlighted for me where my weaknesses have been in the last year or so. I've become complacent in the fact that I've been doing this for 5 years, no problems. Never had a problem because we've never had this, have we? You don't get this type of squeeze happening on multiple instruments at the same time normally because we don't have this type of squeeze. So when something squeezes, yes, it does squeeze, but you don't normally get 2 squeezes happening at the same time. We've got 3 squeezes happening at the same time, and one of those squeezes is the largest squeeze we've seen in 5 years. So it's just one of those anomalies, if you like, in the market that you can't do anything about, and you just have to take it on the chin. So that's what I've done. So there's nothing wrong with the strategy itself, but I think what it's going to do for me is obviously highlight the fact that I'm probably going to have to drop my expectations down to maybe 5% a month instead of 10 to 15% a month, which is what I was getting. So reducing risk reduces profitability, also reduces drawdown. So obviously what I'm going to do is carry on, but using lower risk. So lower risk means I'm going to make less money. There's nothing else I can do about that. However, the ORB and the breakout strategies that I'm using are working incredibly well in this type of marketplace. And the trend pullback strategy on the yen has been working well, but again, not sure about that now. But so from an FX perspective, obviously, for me, I don't think there's an awful lot you can do to forecast price movement now. You can't pick directions based on fundamentals at the moment. You know, this could all change next week. Trump could suddenly go, screw the tariffs. I've sorted out Ukraine. Oil prices are going back up again. Everybody's happy. Let's all keep dropping our interest rates and get back to pre-COVID levels. Yeah, that's what could happen next week. However, if he carries on doing what he's doing, we know it's going to be a totally different world because euro and pound, for example, are going to have to stand on our own with no backing from the US. The US is not going to be the world's leading currency anymore. BRICS is probably going to take over. Therefore, we won't be trading the US dollar as much. We'll be trading the yuan and the real and the ZAR and other things, basically. So I think for the minute, it's a case of reduce risk right down, sit and wait and see what happens when this all blows over. And it may take a month to blow over. It may take 3 months to blow over. We've no idea. But short term, dropping down here, you're going to make money because this thing is moving all the time. The difficulty with this thing at the moment is it's moving like this a lot as well. Yeah, we're getting movement where you see quarter to half an ADR of movement playing out and unplaying within 5, 10 or 15 minutes because we're getting these new spikes that just basically scare the crap out of the market and the market just goes wherever it wants to go. So I'm trading FX at the minute on a breakout strategy, which is this one here, not this one here, which is this account here. And it's absolutely killing it. But it's risk averse, it's diversified, and it basically hits target pretty much every day. So that's what I'm looking at and focusing on moving forward at the moment, is going back down to low time frames and using the position trading strategy as a kind of amble along type strategy rather than the main money making strategy, because I can't rely on the market at the moment to be normal. You know, it's not a case of there's anything wrong with the strategy, but as I've said before, with all strategies, they only work when the market regime is correct. This is just not the normal market regime, is it? So, you know, that type of market is great for mean reversion. That type of market is great for trend. What we've got at the moment, I don't know what it's great for because it's changing every single day. The market state is changing every single day. The currency directions are changing every single day, aren't they? So apart from the euro, which is obviously maybe changing today, we don't know. We'll have to wait and see, won't we? But parabolic to the downside, absolutely on the cards. But is this caused by bank and institutional buying that requires a profit take? I don't know anymore. because I haven't seen that type of movement before. So it's not the sort of thing you can kind of get an answer to either, is it? You can't phone up the bank and go, hey, you know, you moved it up for like the 5 weeks on the trot. Are you taking any profit off of that? There's nobody to ask. So you can't tell what is speculative, what is non-commercial in here. Futures markets you can, Forex you can't. So, I mean, I'm happy to go through any FX pairs that anybody wants to look at, but technical analysis at the moment, it's just not worth the paper it's written on, because support resistance is just not going to work. Previous support and resistance is based on bank and institutional buying levels. These don't exist really at the moment, do they? Because if you get down to a level like the previous day's low where they bought it 2 days ago, this day here, the tariffs are completely different to this day here. The weight of interest in Canadian dollar is totally different. Canadian dollar, so Canada could pull the plug on electricity into Northern America this afternoon if they wanted to. When you get back to this point, the market participants are not the same. The market moves up and down based on market participants and weight of price action at points in price. That's it. That's all it does. It just moves up and down, and it bounces around at the same levels over and over and over again. However, right now, that isn't going to work. So it's a case of, for me, as I say, look for those momentum breakouts. So things like mean reversion strategies using market reverse alerts indicator, probably not going to be as useful, are they? Because mean reversion doesn't work in parabolic markets. So, but this could all change next week. So right now it's a case of just basically flip a coin, press a button and hold it. That's literally the logic behind momentum breakout, isn't it? And this is why this is absolutely killing it at the minute. All momentum breakout is just where your money needs to be. Out the DAX. That's good. So if we can get that Dow break. Oh, Dow's hit target already. Okay, that's good. So yeah, nice clean break on the Dow. Got a runner on. So guaranteed profit on the day again. Lovely. See what I mean? It's just it's not possible really at the moment not to make money on this type of movement. If you're using a stop that's not ridiculously tight, i.e. you base it on ADR, if you look at what the average daily range of movement is at the moment in the NASDAQ and you base everything on that, you're going to be all right, aren't you? And as Ryan said earlier, there's an argument at the moment for using a 5 ADR instead of a 10 ADR because intra-week volatility is changing, isn't it, on a weekly basis at the moment. So if the market suddenly starts to calm down because Trump calms down, ADRs are going to calm down. So you probably want to be measuring your average daily range over a short period of time than a longer period of time. So, morning, Pot DJ, Mumo. Did I miss something? You started early today? Yes, you missed the clocks changing, Mumo. The clocks changed on Sunday. The US market now opens at 1:30, not 2:30. It's caught a few people out this week. It caught me out on Monday. I look at my P&L for Monday. Oh, God. Do you know what? This is what I mean. Look. What was the date on Monday? 10th. I didn't trade the morning session on Monday because I forgot to change the EA settings. So it didn't trade on Monday. But it did trade the afternoon session because I adjusted it by the afternoon. But I missed out on the morning. And the morning was 2 lovely breaks, wasn't it? Do you remember? Well, you probably weren't here. But yeah, Monday was great. I just missed it. Missed that on Monday. Because I didn't set the EA up for the right clocks. That would have been an even better day on Monday than 11%. But anyway. Right. So anybody got any FX pairs they want to look at? Bear in mind everything I just said. I can tell you where I think it might be going based on how markets used to move in the past, but I've got no clue today. Basically, it's going to go up and down, or not. I don't know. But all I do know is it's calming down. So it does seem to me that the markets are starting to kind of contract a little bit at the minute, especially if obviously you look at these euro pairs. So euro odd, we have had the reversal and the retest now. So the end pattern reversal is going in. We did have that on Monday as well. Sorry, on Friday last week. And then Monday looked like the reversal was starting, didn't it? So we've had a couple of instances where we've had this type of price action creeping in. If you remember, I posted on in the Discord group on Monday, I think it was, or Friday, one of the days. We got that 3-bar reversal, and it was like, this looks like it could be it. And then I pointed out we had exactly the same 3-bar reversal the day before. It didn't work out. So reversal alerts at the moment. Obviously, you know, it is a break in structure. It is selling, but you know, we just can't work out how much of this movement is speculative and commercial at the moment. I'm suspecting a lot of it is commercial because we've seen what's happening in the stock market. So we'll see. There you go. Euro pound pulling back up again. So there's your multi-day M formation. So this propulsion gap to the downside. We got to get through that accumulation basically to come back and retest down here. So starting to happen. Stuff is starting to happen. But, you know, how many times have we seen something like that happen? Yeah. And, you know, to many degrees, we've had selling going in for 2-3 hours on the trot and then totally invalidated. So we'll see. How is ORB V2 looking? Go back and watch the beginning of the stream, Mumo. I've spent about half an hour talking about it. Pound US dollar, but you probably had it. No, I haven't looked at any FX. I'm not going to look at anything specific really today. I'm not going to go. Sorry, I can look at things specific, but I'm not going to go through all the pairs today. There's no point, really, because we're just waiting to hear. Today, we're waiting to hear what's happening with the next round of tariffs, and we're waiting to hear. It's not today, is it? But Putin basically as to whether he's going to agree to what was put together yesterday with the Saudis. So there's going to be a big move if that peace deal goes in. There's going to be a big move because it's going to calm down a lot of the fear in the market at the moment. The fear and greed index at the moment. Oh, there we go. That was good timing. Fear and greed index at the moment was down at 16 yesterday. It doesn't get down there very often. It's ticking up slightly today. And if that peace deal comes through, then we'll still be up here, but we will get a little bit of a rally started in the stock market. And obviously, because Trump's done a Tesla advert now live, obviously Tesla's going to pop. Let's hope not. But anyway, pound US dollar. So yeah, we had a reversal in back in the opposite direction yesterday. We've had that whacking great spike go in there this afternoon. So there's a 3-bar reversal. Yeah, beautiful 3-bar reversal. Oh, I sound like Trump, don't I? Beautiful. We're just about to get a reversal alert on the hourly if we can close bear in the next 30 minutes. So we've got 30 minutes left on the hourly. That will give us a reversal alert south. When you get a reversal alert north followed by a reversal alert south, it means you ain't going anywhere. So sideways movement at the minute, which is basically what we've had all week on the pound US. We're just basing out up here. So this one I'm still in. I've done 3 drawdown controls on it. Still in, but again, it's one of those. I've got, as you can see, I've just put aggressive positions on this morning to bring this average up. If I can get an ADR, half an ADR of movement to the downside, I'm out. I'm done. I will see what happens with it. So for me at the moment, my average is here because I've just taken 3 positions today very close together up here, because these highs we've invalidated basically. So I'm looking for this high here to be the high point, and the peak formation high, and we're going to form a range hopefully. So I'm looking for a 125 ADR push to the downside on it. Average is here, so I've got an exit on this. Basically I can get myself flat, which means I can get the capital used somewhere else. Breakouts at the minute, but if this does start to play out and this reversal holds, and that is a lovely rejection wick. Usually you get rejection wicks, obviously, which are the exhaustion moves at the highs. If that is the exhaustion move at the high, we should at least test this level, 125 ADR. And then obviously, if that breaks, that will confirm downside momentum, and you'll start to see a load of sellers pile in on a pullback, which would bring us down to this sort of level, which is the previous monthly high, which will fill these propulsion gaps. So there is potentially a 300 ADR move, 250 to 300 ADR move to the downside from where we are. But it's going to take some US dollar strength, and it's going to require Trump to do something unusual, which is make America great. Nothing he's doing at the moment is making America great in any way, shape or form. I saw the funniest post yesterday. Posted on the White House Facebook page. Made me laugh. I was just trying to see if the actual post was there from the White House Facebook page. All this stuff going on at the moment. No, I can't find it. But anyway, all the stuff that's going on at the moment with the tariffs, destroying the stock market and everything. What did the White House post yesterday? The cost of eggs is down by $2. Really? That's what you're claiming as something that you've done that's good? You've dropped the cost of eggs by $2. Have you looked at the stock market? And you're blowing, the only trumpet they've got to blow at the moment is, we've dropped the price of eggs, everybody. Oh, that's great, because half the people can't afford eggs at the moment. My God. It's mental, isn't it? Just mental. Crude oil inventories just come out, 1.4, forecast at 2.8. Might help oil price. That's going down as well. I've been taking a lot of the table around 38.2 fib. Slowly clawing back some profits. I can use as a buffer. Yeah. So, I mean, with all these moves, every move you have at the moment, which is parabolic, you've got to, I mean, that's not as parabolic. The problem with this one is it's just not really pulled back since initial entry. This one just went into accumulation for 2 weeks before the parabolic move, which is why some of these have got into such a mess. But so these sorts of moves, the only thing you can do really is look for retracement levels. So flag break, small pullback, medium to large pullbacks. So yeah, I mean, that's what you want to be looking at. So whenever you're in any positions, look for where we are likely to go. So assume worst case scenario is only going to be a flag break. If you can get out on a flag break, take it at the moment. It may well do that. If it does, whatever. But if it doesn't, it's not worth risking. So if you can take a flag break, take a flag break. 23.8, 23.6 retracement. Support resistance levels, 61.8 in this case. You'll be lucky, I think, at the moment. But you know, I've kind of mentally written Trump off as not going to fix this. But he may well do. It may all be a ruse. It may be part of a master plan that he hasn't informed the rest of the world, including his own people, about. And if it is, this is all going to reverse. It's all going to be A-shaped recoveries because he's just going to undo everything he's done. But he tried this last time he got in, and he was knocked back very quickly because he didn't have control of Congress. He has now. So a lot of the stuff that he wanted to write, he couldn't write last time. He's unlimited power this time round. So this is the thing that worries me about a lot of these moves. The market is in absolute panic, and the market can't see a way back if he carries on doing what he's doing, because there is no way for economics to carry on as they are, worldwide or within the US, or within anywhere. This morning we woke up in the UK to a steel industry that is on its knees, China buying most of our stuff, and being told that it's going to cost 100 million more now to export whenever we want to do it. Can't survive. It's not going to survive. Yeah. So, stuff like that is world changing. Therefore, it's currency changing. And a lot of these moves potentially are just banks taking a punt on, quite rightly, which way things should go in the future. But there's no reason for them to turn it around, which is the worrying part. No. But short term, you're absolutely fine on low time frames. Hello together. Hello together to you too. Do you know if the procents counts allow you to take micro lot positions? Don't know. No, they don't. No, they don't. Because you're trading cents. So you can't take a 0.1 of a cent. A 0.1 is a cent sort of thing. You can't, no. I don't think. No, you definitely can't, because I've tried to shut, because the Signal accounts that I set up, I couldn't do drawdown control on them. Do you remember? So basically, when you're trading, I was trading a 0.17 lot. I can't close out a 0.8 of it. If I wanted to do 50% drawdown control, you can only close out a 0.1. So you can't close out. You can only close out minis, not micros. So therefore, you could only take micros. Oh, I don't know, actually. No. Do you know what? Try it, Ace. I don't know the answer to that one. I think you can, but you can't close. I think there's a rule that you can't close less than a mini, but you can take a micro. I don't know. You'll have to check. That's one for the broker, not for me. Been setting TP in case I'm asleep. It's been working up 1.62 this week. Cool. 5.37 in 2 weeks. Good job. Yeah. Fibs will always work, basically, because well, they will always work in a normal market where you've got speculative orders, because speculative orders always get profit taken. Commercial orders don't. This is the thing. This is the thing that we don't know at the moment. How much of this move on the euro specifically really is commercial? It's an unknown. We know that this is commercial. That is, we know that it's institutional movement out of the stock market, but there's absolutely no reason for that to happen either at the moment. Every single one of the businesses in here imports and exports. Every single one of those businesses, every single one of the S&P 500 imports and exports. Every single one of those businesses has just had 25% or so stuck on its costs, or 10% stuck on its costs. The American people are not getting richer. Yeah, they are not making more money. The wages are not going up. Unemployment is not going down. Therefore, they haven't got any more money. So as a business, if your costs go up by 10%, you cannot pass the costs on. The only thing you can do is cut your bottom line by 10%. Some of these businesses don't make more than 20 to 30% net profit. Therefore, you cannot cut a third of your income. So what do you do as a business? This is why we've got this happening, because the markets are going, unless they come up with some answers soon, I do not want to be holding their stock. And that's what we're seeing. Same as it happened in COVID. And this is the reason we had the stock market crash in COVID. But look what happened after that. The reason we got the stock market crash in COVID was because everyone went, we're locking down the world. And they went, okay, so I can't go to work. Okay, so if I can't go to work, how's my work going to get anything done? If my work doesn't get anything done, it's not going to make any money. If it doesn't make any money, it can't pay me. Sell stocks. Yeah. It's the inverse of that we're seeing at the moment. If businesses can't buy things at the rates they used to buy them at, they can't sell them at the rates they used to buy them at. If there's no consumers that can afford it, what are we going to do? Sell stocks. Panic. How long is it going to go on for? Ask Trump. Not that it matters, but Nebraska is set to be the first state to go fully bankrupt by Q2. Really? I shouldn't laugh. But where did you hear that, Brian? Jeez. This is the thing. There's a guy, I was watching the news last night, and one of the political commentator for the news in the UK, and he basically sat down there last night, and he was asked a question about what was going on because he'd been in a press conference and so and forth and all that, and basically he said, I've got some bad news for you, but that's before we get onto the really bad news. And he was basically just sitting there, and he said, I was sitting in this room of reporters, and we were getting all this information coming out, and everybody in there looked at everybody and thought, are we the only people on this planet that do not see what is going on here? And he said, I think everybody in the world right now knows that everything he's doing is wrong apart from him. Why is nobody in the White House saying anything to him? Why is nobody saying, Donald, you've just become £1 billion or $1 billion poorer today. Tomorrow you're going to be $1 billion poorer as well. Elon is going bankrupt, Tesla. He's asked you to advertise his cars on telly because he's losing so much money. This is going wrong. That's going wrong. Everybody's getting poorer. Everybody on the planet can see this. Nebraska going bankrupt in Q2 because it's all to do with farming, and farming's getting destroyed. Nebraska can see it. Why isn't Nebraska marching on Washington with pitchforks and machine guns like he got them to do when he lost the election because it was rigged? Yeah. Why is nobody doing this back to him? Because he is doing the opposite of what he said he was going to do. He's destroying the economy, not making America great. Why is America sitting around and going, yeah, he'll fix it? He's not Bob the Builder. Come on. I just don't get it. Nobody on the planet gets it. I don't know. News feed yesterday. Yeah. You got to, I mean, the thing with the news feeds at the moment is I don't know what to believe and what not to believe. I mean, especially when I'm watching Financial Juice, every 5 minutes I get something coming out. Yesterday was a prime example with the tariff increases. I saw the tariff increases. I went out to the gym. Before I left for the gym, there was another 25% tariff increases going on. It was going to be 50%. When I came back from the gym, I loaded the newsfeed up and looked at it, and it was not 50%, it was 25%. And I thought, that's either a mistake or misreported, but I have no idea which one it is because it changes so quick. So today Nebraska's going bankrupt. Tomorrow, they might be absolutely milking it because he changes a rule that makes all farming non-taxable. And there will be 25% increase in profits if you export US of some, I don't know, you can't make it up, can you? Because he just writes on a piece of paper and goes, that's law. And everyone goes, that's not going to work. I'm not going to say it because I'll lose my job. It's literally what's happening, isn't it? Nuts. Do you know what? I'd love to be in a bank right now, especially in a pension fund, seeing what they're doing at the moment. They must be running around like headless chickens. For them to be issuing warnings as well, that's the thing that worries me. If pension funds are starting to issue warnings about quarterly returns, you know there's a problem, because the last time they did that was during the housing crash and pension funds went bankrupt. Yeah, they are starting to raise those flags now. We're only like 4 or 5 weeks in. They're already raising flags about bankruptcy and pension funds going bust. What do you expect? They're all, 30 to 40% holdings in this thing. That was your pension fund 2 weeks ago, and there's your pension fund now. You're stuffed. Yeah. If you measure that move there, oops. So we are, what's that? 31557. Okay, so that's the last time we had this move, back in July 2024. Start of the bear market, which went on for 12 months. Yeah, stock prices easily down there by summer, unless something changes. There's literally no reason why it shouldn't happen, is there? And this is the COVID recovery. Yeah, so that is that there. You can't see it behind my head. You get rid of myself. So that is COVID. What happens next? Who knows? We'll have to wait and see. But I and I think most people in finance basically are more looking at that than that. Yeah, this COVID recovery caused the bear market, because the COVID recovery happened while businesses were closed. Therefore, stock prices shouldn't have gone up. They were artificially inflated. This is not artificial inflation. This is running for the hills. And that's why they started running for the hills, because it was too artificially inflated. RSI. Anyway, but we'll see. Who knows what's going to happen next? But this potentially is, if you believe we're still in a bull market, this is, Warren Buffett will be buying the crap out of this. I can guarantee you that. I should imagine Warren Buffett has got a line direct into Trump's office. Morning, Michael. Right. Let's just have a quick look at what's going on with the indices. So ADR on the Dow. Nasdaq's down 2R on the initial opening range. So if that Dow hits target today, that's going to lock in another 4% today, which is very nice. 15% banked again here today. So TP hit on that one. Stopped out, unfortunately. Look at that for a stop out. Happens. Not a lot you can do about it, but 10% of ADR stop out there. And then it went. So I'm just 5, 10, 15, 20, 25, 30. Four, 7, 9, 3. Sorry, bear with me 1 second. I just want to see why that didn't take a 30-minute ORB. Might have found a bug. That didn't take a 30-minute ORB for some reason. Oh, that's why. It does. It works. Look, it all works. Didn't take a 30-minute ORB because I've hit target. Done for the day. Not going to trade anymore in case I lose the money. God, even I don't know. It's just too easy, isn't it? Where's the camera gone? Sorry, turn myself off. I was talking about the S&P. I'll turn myself off. So yeah, so the targets hit basically. It would have taken a 30-minute ORB there. So it would actually be short on that. Wouldn't be short there. It would also be short there on 30. 19.3. Can't see what the range is. 24.8. Yeah, so it would have taken a 30-minute ORB. So you'd actually be short on the ORB now here on the 30-minute, and would also be short 30-minute ORB there. So again, more opportunity to bank, but didn't get taken this afternoon. I didn't know I'd set that up with a target. Sorry, I've got liquidation targets turned off. Right, and I have found a bug. Sorry, I'm just looking through the settings, trying to find out where I've set that target, and I haven't. I've got a bug in the code. I hard coded it in, didn't I? Sorry, forget me. Right, I'll carry on. I'll leave that till later. TP just about to get hit on the DOW, still trailing. I'm just going to tighten the trailer up on that a little bit. Just going to move that down to a 120, 12-point trailer. Just in case this is it. We're at ADR, so we've hit the average daily range for the day, mainly due to that news spike. So just in case we get an ADR bounce, basically, I'm just going to lock in a little bit more extra profit, but target's only there. There's no point in just chancing it, basically. So just going to lock a little bit more in, just guarantees the day. Right, that's me all done for today. I'll be back tomorrow morning. We've got member stream tomorrow morning. Tomorrow what I'm going to do is I'm just going to do some live trading tomorrow morning, very similar to what we've done today, and looking at breakout strategies. So I'm just going to go through some a little bit what this account is doing, which is using very high risk, a very high risk strategy on breakouts. So this is trading a breakout strategy, basically, that just works on 5 FX pairs and indices. So I'm just going to go through that tomorrow morning, which is basically looking at a 5-minute strategy. basically for FX, but as a portfolio. So what this strategy is doing, I haven't got the trade manager on that one. It's on my other screen. Let me use that one. So what I haven't got any trades open on it. Let me go over to here. So what that strategy is doing, and I'll go through it tomorrow in the member stream in more detail, but it's basically getting itself into a portfolio. Obviously just one direction, so it won't be hedged like this one is. But what it does is it's basically looking for, again, opportunities just to close out profit. So the EA that I've got running on there is basically just taking trades which I'm manually managing at the end of the day. So all it's doing is really just as soon as we find a range form from the morning session, basically on FX, which is basically whenever I sit down. There is no start to FX, so it's just whenever I sit down, which is usually for obviously the stock index open. It's just taking breaks, and it will take a break on all of the instruments basically pretty much around about the same time. Some of those won't work, and some of them will, but every single trader's got a stop loss based on 10% to 15% of ADR. And the ones that work just let run. There's no targets involved. All it's doing is basically waiting for momentum. I'll just see if I can show some of the trades. I don't think I've got. Oh, there you go. Show some of the trades. So all it's doing basically is taking range breakouts and uses a fixed stop loss. Yeah. So this is the S&P. So obviously it took a breakout there, didn't work out, stopped out. It tried to take a breakout there, didn't work out, stopped out. Tried to take a breakout there, didn't work out, stopped out. Tried to break out there, didn't work, stopped out. Yeah, so there's tons and tons and tons and tons of stop outs. Went long there, didn't work out. Went short there, didn't work out. Went long there, that one worked. Hey, that looks like it's crap, doesn't it? But if you look at what happened on the inverse of that, which would be something like gold at the same time, yesterday. No, not gold. It would have been maybe Euro US. I haven't actually analysed these trades at all, so I don't actually know which ones made money yesterday, but no, it must have been something else. It had a winning day yesterday. I'm pretty sure it did. Yeah, it did have a winning day yesterday. Let me just have a look. One sec. Yeah. So we got some profit in there. So we had a nice winner there. Nice winner there. We had another winner in there. So basically what the okay, so not lovely big winner there. Look. So what it's doing is basically it just takes breakouts and it treats the entire account, which is trading 1, 2, 3, 4, 5, 6, 6 FX pairs, well, 5 FX pairs, gold, and 2/3 indices, depending on what time of day it is. But it basically takes every momentum move it finds based on the volume that's going on. So as soon as something starts to move, it attempts to take it. If it doesn't pull back by 10% before it moves, that move there is going to be larger than the stop loss on the inverse instrument. So, for example, US dollar collapses. Yeah, we take a US dollar yen short. At the same time, we'll be taking gold long because it's the inverse of the US dollar yen or inverse of the euro US dollar. So what it's doing is it's automatically taking a momentum breakout in both directions using two instruments to offset each other. but one of them has a 10% to 15% stop loss based on it. The other one has an unlimited upside. So what it does is it waits for the portfolio as a whole to become profitable, and then it banks it. And it keeps doing that until it gets to 2.5K. Yeah, which is what it's done today. Yeah, so it basically just continuously takes trades. If it gets them wrong, it gets them wrong, and it keeps getting them wrong until it gets them right. So what it's doing is it's taking breakouts and waiting for the market to break. If the market doesn't break, it loses money, and it gradually loses money, and the P&L goes down and down and down. As soon as the momentum hits, it just goes bang and makes the whole lot back and banks it. Yeah, so it's, if you like, a coin flip strategy, but it uses high risk and it uses lot multiplication. So it basically just scales in ever so slightly larger with every permutation. So 1.2. So it's basically going for, it uses 250 risk to start with. And it basically goes for 2/3 trades getting a 3R. Yeah. If the first 3 trades taken in the day get 3R, we're done. That's it. Because basically we use risking 2.5 on each trade. So you're making 750. Yeah. Multiply that by 3 is 2250. Well, our target is 25. So you've got to kind of get one of them going to 3.3R basically. But basically you want 3 trades to work at once. Yeah. On 6 to 7 instruments which are inversely correlated. So all this strategy does is it says, if we get momentum, go for it. If we don't get momentum, sit and wait. So it's a really simple strategy. So I'll go through it tomorrow. In this type of market, and this is where you need to adapt as a trader, this is what works. Yeah, momentum breakout, because we're in completely chaotic lunacy times where the thing's just going nuts. Benefit from that by just basically going in the direction of the nuts. Look at today. Prime example today, isn't it? Goes nuts, go with the nuts. Yeah. And don't stop going with the nuts while it's going. That's literally all you got to do. Yeah. As soon as this thing starts taking off, press the sell button, sit there and hope it doesn't pull back 10%. It's not. It doesn't do that at the moment, does it? So while the market is doing this, mean reversion, as I covered at the beginning of the stream, isn't going to work. So you've got to diversify out into what's working at the moment. Until this thing's calmed down and we get back to some normality, this is the new norm. So I'm going to go through this in the members stream tomorrow. And this is how I'm getting the vast majority of my losses back this month. I'm not there yet, but I'm not far off. So I'll cover this tomorrow. It's not an EA that I would, or a strategy that I would say you want to use on a regular basis, because it's high risk, incredibly high risk. It can go north, it can go wrong very, very easily. But there's a downside limitation in it as well. So the maximum loss I can take on this account is 4.4. Not on that EA, it's on the other EA. So the maximum it can lose is 4.4. So in any given day, I'm risking 4 grand basically. But on, I mean, I think I hit it once. But this, if you go into a rotational market, I mean, we haven't had a rotational market. I mean, there is no market that's rotational at the moment. But if you look at a low time frame, so there you go. So this here, these would be losing days. Yeah. So if you go into a rotational market for an entire week where you're in contracted ranges, it will really struggle. However, my EA that I use to get these trades on won't take that type of market because it's too contracted. It needs some movement. Yeah. I think 15-20% of average daily range is what I'm classing as a breakout. So so it's not the sort of thing I don't think you can use. So these types of things, it's going to get murdered. Yeah. Not murdered necessarily. It all depends on what's going on everywhere else. Yeah. If it will get murdered here, but if at the same time that's getting murdered, gold is going like that, gold is going to pay for that. Swings and roundabouts, isn't it? I think that, and I'll cover it tomorrow in more detail, but the theory behind the strategy is at any day something is going to move. So if you diversify your portfolio into indexes, commodities, and Forex, one of those things is either going to get blown up or killed. Yeah. Gold at the moment, awesome. Oil, terrible. Both commodities. So if you trade two commodities and one goes nuts and one goes the other way, one of them is going to pay you. Yeah. And at the minute, because you cannot pick directional bias, you just go with whatever's moving. So you've just got to pick diversified instruments, which is all I've been doing. But I can't teach anybody a strategy because it's not a strategy. It's literally movement. I'm trading movement, and it's random. But I'll go through what I'm doing tomorrow. Hopefully some people can use it to get out of whatever they've got into. In a normal market, I would be looking at a reversal on the NAS at the moment. Yeah, exactly. I covered that earlier, didn't I? It's at the exact point. This going as a measured move, and same COVID. This is exactly the same distance, pretty much yesterday as COVID to the pip. That's a little bit bigger, that one there, but yeah. If we were in normal trading conditions right now, Trump hadn't taken control, Biden was still in there, and I saw this type of move, I would be all over it from a buying perspective. But you can't buy this at the minute. Yeah. This is not caused by normal market movement. But, equally, I say it every time, every day in here. Yeah. It's only going to do one or two things because it can only do one of two things. It's either going to go back up from here or it's not. And everybody tomorrow that sees a bull move followed by a bull move will become a bull. And then after it's pulled up to here, it will either become a bear or it won't. It's always 50-50. Your job is to wrap risk around 50-50. Which is why we have the bulls and the bears, don't we? Because if you want to be a bull, you've got to find a bear to take the other side of your trade. If you want to be a bear, you've got to find a bull that wants to buy this. One of you is going to be right. Scaling in on micros just to play it safe most likely will end in a scalp. Yeah. I can see us taking yesterday's low out today. Look at the DOW. This is not stopping. Support irrelevant. That's ADR. That's only ADR. Yeah. ADR means nothing at the moment. There is no average daily range. Well, there is a new average daily range. ADR 10, we are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10. There you go. So, this here is the average daily range of what we're in. So that is likely a bounce point because this is now adjusted for these 10 days, isn't it? So we've had more than 10 days of drop. Therefore, the ADRs are actually normalized now. So, it could actually hold yesterday's low today because yesterday's low is an extreme because we've had a bull move pre-market. But look how quickly they're undoing this bull move. Yeah, this propulsion move held yesterday. It held during Globex. This is the first retest during market open. I can very easily see it pushing back up into this propulsion gap that's forming here, but I can equally see it getting sold back off again. But today, it's hard to be a bull in this market. Very, very hard. TP hit on Dow. So going to close the day on about 3%. We have yet to see a daily candle close above the previous day since the middle of February. Is it middle of February, really? Blimey. Yeah, so from there, lower low, lower low. It didn't close though, did it? Yeah, lower highs. So we got lower high, 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 higher high, lower low outside, lower high, lower low, equal high, higher low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high, lower low. Every single time you get a megaphone, we go the same way. It's going to stop somewhere, isn't it? It's going to stop somewhere. If we knew where it was going to stop, see this to me. I mean, technicals right now, buy it, definitely buy it. But the guys that bought this, yeah, going back to September last year, do you think they're still bullish? They're not interested, are they? We were bullish back in September. Trump's on board. We're not bullish anymore. Yeah, so technicals mean nothing. Technicals work incredibly well when the market is normal. This is not normal. Yeah, the buyers here rebought that. The sellers here resold that. The buyers here bought that. Are they still there? Probably not. They're probably sellers right now. So absolutely scream straight through that propulsion move. As we did this one. Bought it. Bought it. Bought it. Trump's in. Boom. Straight through it. We did actually rebuy it, to be fair. Look. We had a go. And then next day we went, nah. But we'll see. We will see. But this is the beauty of this market. Look at the size of these wicks. Yeah. Whatever you do intraday, you'll make money. This is where the money is now. The money at the moment right now is on the 5-minute charts. Just getting in and holding it. Shut your eyes. Yesterday, I got on my Top Step account and I shorted it on a pullback yesterday. And I was sitting here watching it accumulating for about 20 minutes. And I said, screw this. And I went downstairs to make a coffee and I went, nah, coffee's not long enough. So I took the dog out for a walk. Yeah, because it takes 30 minutes. Came back, 2.5 grand. Because I wasn't here. If you watch it, it'll drive you nuts. But you can see the intraday movement. But the intraday movement is made of huge 5-minute candles at the moment, not gradual, grindy, normal price action. It's like, and you can't get in on it. So you have to be in on it before it happens. And when it happens, you hold it and just close your eyes, hold on tight and let it go. Not a lot you can do. It's fun. I don't think anybody can say they're not having fun at the moment. 5th of March was one where it got crushed. Yeah, I mean, closing above the previous day's high. I mean, we haven't, have we? I mean, we closed above the previous day's close there, but the previous day's high, we didn't get anywhere near it on the 5th of March. We closed above the close, but not above the high. So that's the most bullish day really we've had in a month, isn't it? Really, pretty much. Today's prime example. Get a TP on this shortly as well. I need to adjust this. I mean, I'm in profit for the day, guaranteed, locked in. So I'm going to move my TPs all the way down to ADR today. and I'm going to want an ADR hit, which is basically, this is yesterday's low. This is ADR. This is the low of the New York session yesterday. So I'm not interested really in trying to get out at 5R, which is bang in the middle of nowhere here. Either this propulsion gap's going to hold or this propulsion gap's going to hold, but I'd rather wait to get down there. If this is hedged today and it locks in $200 a loss, I don't care. Pound, this is not dollars. But there's no point in trying to take an exit and jeopardizing the profit today. So I'd rather just sit in it and take the loss at the end of the day than try to exit the hedge. There's just no point. It's too dangerous with this. I can easily see this ADR. If you look at the daily chart on most of the indices at the moment, there's not many days. There's one there. There's an inside day there. So if you look at the number of days that we have not tested the high or low of the day, you've got one there, which is an inside bar. That one took out the low. That took out the high and the low. That one took out the low. That was an inside bar. Yeah. Then we took out the low. 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 We've taken out the high today. So we may not take out the low. But there's been 2 days where we haven't. So for me, looking at what's going on at the moment, testing yesterday's low, absolutely on the cards. Especially after this bear. Look at the rejection to buy. There's no one interested in buying. Even after Donald Trump's advert for Tesla. Who'd have thought that wouldn't work? New ORB looking good. When will this be released? When it's ready. Yeah, when it's ready. I mean, it's working fine. I just need to this is a live test today of this is what I call the release candidate, which is version 2.0, not version 2. So this is release candidate version. So I just wanted to test logic today, and it's all worked absolutely fine. So I want to test it tomorrow morning. I want to test it tomorrow afternoon as well, just to make sure. But I think it's ready to go. I've just done some back testing as well, and some system parameter permutation testing. So it's all, it's all doing what I expect it to do. Making a loss, not the holy grail. Will that be a new release or update? So it's an update. So it's going to be an update for the ORB EA. So anybody that's using the current ORB EA, if you do not want the new version, do not update. Yeah, because its logic is different. Everything's different. It's not everything's different. The strategy is the same, but the execution is different. Functionality is different. So if you like what this does and you don't want it changed, do not update, because you won't be able to roll back. So either you like the new one or you don't. If you want to test the new one, download the demo from the website so that it doesn't interfere with the one you got on MQL5, and then you can back test it. And if you don't like what it does, because your set files ain't going to work because the inputs are all different. So, but it's evolution, yeah? If you like the iPhone 2, tough. When the iPhone 5 came out, they stopped making the iPhone 2. If you didn't want to upgrade, you keep your iPhone 2. Eventually, your iPhone 2 won't work anymore because they drop support for it. Then you have to get the new one. That's evolution. Unfortunately, it's what we do as a human race. We change stuff, we make it better. If people don't agree with it being better, nothing you can do about it. Someone's always going to disagree. When you go over what happened yesterday with the ORB, can you go over what happened yesterday with the ORB V2? I need a t-shirt with my logo on it. I've got those already. I just don't wear them anymore. I used to wear uniform every day. I've got 3 uniforms and a hoodie, 2 hoodies actually, and a cap. You can buy it all. You used to be able to buy it all. I don't know where it is anymore. You used to be able to buy all of this stuff. I don't know where it is. There used to be a shop, but it's gone. Anyway. Sorry, can I go over what happened with the ORB V2 yesterday? Um, um, not really plotted very easily, but what happened yesterday was jolts. Yeah, so market opened at 1:30. It sat around for half an hour. Jolts did a whipsaw, which basically made the ORB take long and short and come back inside and stop out, and then it went. So basically, every index yesterday got jolted by jolts, and it just made stop outs. It was constant stop outs yesterday. So if you look at the trades yesterday, which are a little bit difficult to see, but that was your ORBs. So it took a trade there and a trade there. Well, I can't see what that is. But there's a loser anyway. This is jolts. And then on the S&P 500, we had a long and a short. So we had a short stop out there. And we might have taken a long there, which would have stopped out. DAX stopped out. Short, stop out, dead. Sorry. DAX, stop out. So 2 stop outs there on the DAX. And a 3rd stop out on the DAX. Yeah, because it took the 5-minute ORB long, the 15-minute ORB long, and the 30-minute ORB short, and then it collapsed. Yeah, this is the thing with the ORB strategy. It is a momentum breakout strategy. It broke out on momentum yesterday. Unfortunately, it broke out on momentum after it stopped out. So I could move my stop loss twice as far, and I would have caught that yesterday. However, other days, I would want my stop loss tight because it went like that all day long, and I stopped out 5 times or 4 times. Yeah, there's no right or wrong. This just happened to trigger me into a short. As it stopped out, it collapsed. DAX. FTSE, clean break. Straight down. But also stop out. So I had a stop out on the FTSE. Yeah. The 5-minute ORB is there. It took a 5-minute ORB short, stopped out because it went sideways for 2 hours. Then it took a 30-minute ORB short, which worked out straight to 3R. So this made plus 2R. Brilliant. FTSE made money yesterday, but every other instrument yesterday got whipsawed. There's jolts. Went long, went short. Went long actually twice in there, I think, and then short. You can't make money when the market does this. That's news. But yeah, that's what happened yesterday. Hence the loss. but you get losses. You know, this is that's remember I said my max loss is it was set to 4-4. So with the FTSE win yesterday, that's probably about right. You know, this is the only day in the last 4 weeks. As you can see, week 5 there was a loss, but the only day in the last 5 weeks where we've had whipsaw at the open, because the markets are just on fire, aren't they? So you know this strategy is not going to fail during this. But ORBV2 I've back tested. You know, this if you look at ORBV2, this test I've just done here, this is the 1% test, I think. Yeah. So this is the 1% test on ORBV2. You know, you can see the balance up there. Look, it's 2.5K account. This is over. I think this is 15 months test. Yeah, it's just 15 months. It makes losses. Yeah, the equity curve. It's the same strategy. Yeah, it's ORB. So you're not going to make money constantly with it. It's going to have losses. When the market is ranging, it's going to lose. Yeah. But when the market has momentum, it's going to win. Yeah. But the losses have limited downside. It's a standard stop loss strategy. It's a 1 to 3, 1 to 4, 1 to 5, whatever R. UC is dumping. I wouldn't really call that a dump, Harold. It's an inside bar on the news at the moment. It's not really gone anywhere. So, you know, you're going to get periods where the market goes into stagnation. You can't predict these. You can't do anything about these. But the downside is limited to 1R. So you were looking at M1. Yeah, it's probably, yeah, M1 it's been dumping for 4 minutes. It's not really dumping, is it? Even that's not really a dump. Going the right way though. But the you know, this is a system parameter permutation test on the SPX for the ORBV2, and this is testing 1, 2, 3, 4, 5, 6, 7 inputs, which 1600 tests. So there's 1600 system parameter permutation tests here. Every single one, even down to the very worst 1600 tests, 1620, is profitable. Yeah. So if you put this EA on the S&P 500 in the last 2 years, you cannot lose money with it. It doesn't lose money because it's a stock index. You know, you can't. It's hard not to get breakout strategies working on stock indexes because that's all they do is they pump and dump. If something pumps and dumps, it has momentum. If it has momentum, it's going to break out. If it has a momentum breakout, you can trade it. That's it. You just got to wait for the market to be in the right conditions. But it doesn't matter whether you use risk multiplication, doesn't matter what size stop you use, what size TP you use, whether you trail, whether you don't trail, whether you partial close, how much you partial close by. All of this has been tested. Different ranges. I've tested 10%, 20%, 15%, 5%, 25% initial opening range based on ADR. They all are profitable. Yeah. But it's one of those strategies that is annoying when you see that happening. Yeah. So you start it and you sit there for 3 weeks going, this thing's just not working. Yes, it is. You're just in the wrong market regime. This is the right market regime now to be trading ORB. Yeah. Because it's nuts. Yeah, and long may it stay nuts. If the stock market continues to collapse for the next 6 months, I will be paying my mortgage off. It's not going to, because if it collapses for the next 6 months, the entire world's gone bankrupt and World War III is highly likely to have kicked off. But the longer it stays volatile, the longer you're gonna make money with this type of strategy. So I will get it out as soon as I can, but I can't get it out until it is I'm 100% sure it's safe. Yeah, I'm not the sort of person that's going to just pump it out because it's ready. Someone may have a problem with their account. I've got to test it thoroughly. So I'm happy personally because I've tested it on all of my accounts and it's working, but I haven't tested it on other people's accounts. So I can't test everything, obviously, but it's I would say 95% there. But that's thanks to the members yesterday, because I managed to actually do what I wanted to do yesterday in the live stream, which spurred me on to actually get it finished. I want to buy merch. I don't know where it's gone. I really don't know where it's gone. Oh, there it is. Ta-da! I've no idea how it works, but there it is. Store. There you go. So I have got... If you go back and look at some of my old streams, you'll see me wearing all this. I've got that hoodie. Not that hoodie, because there's a woman in it. I've got that hoodie. I've got the polo neck shirts. Oh, where's the polos gone? They've gone. I've got the polo neck shirts, which don't seem to be there anymore. But you can have t-shirts, you get caps. I've got cap. I didn't bother getting myself a mug. Beanie. Buy what you like. I don't get a cut of it. It's just actually I do get a cut, but I think if you buy a hoodie, I think I might get 150 or something. I don't know, but if you really want one, go get it. Knock yourself out. I'm actually using the 4-hour at the moment for areas of interest for intraday. Yeah. I don't know what's working and what's not at the minute. It's all nuts, isn't it? Doesn't matter what's working. Flip a coin. Yeah, 50-50 shot and you get it right. Forgot to mention new prop that is actually looks promising called the Futures Desk. You can customize your evaluation. It goes right to the live account. It goes right to a live account once passed. The Futures Desk. Go away. Oh, that's moody, isn't it? Trade for us in our live futures accounts. Oh, look, they've got my merch. They've got merch. She doesn't look like a futures trader, does she? You sure she trades futures? I think she might be a stock photo lady. He's definitely been photoshopped. Uncapped payouts. Trade how you want. Micro scalping is fully supported. Have the lowest commissions available. 230 round trip. How long have they been going? 63. Yeah. Oh my god. PFDX. Is that the same as Top Step X? Is it the same firm? Yes, it is. Look, same firm. Right. So this is the company that. So this is. Have you checked who owns this, Brian? Because you know the company that provides this software is owned by TopStep. So This is Top Step software. Right, when you see people with loads of screens like that. What's I looking at? Pricing. Okay. End of day drawdown or static drawdown. That's good. Oh, I see. So your assessment changes. Okay, so 12 days path to live. Trade at least 12 days. They've got a consistency goal that that's going to be really hard to pass. Your profit target goes. So there's loads of these out there, isn't there? So if you go with a static, does that change your consistency rule? No. So basically, if you use Top Step, largest, most established, been around the longest, properly run, yeah. If you use Top Step, you can pass in 2 days. Actually, it's 3, but you pass in 3 days. So if you've got a 3K target, they have a consistency rule that your highest profit day cannot be more than 50% of the total profit gained. So if you've got a target of 3K, I set my upper level to 1450. So day 1 hit 1450, day 2 hit 1450, day 3 100. Pop it in the bank, quick scalp, done. Yep, passed. This one, you got to do 12 days, and they split the consistency target down so that your maximum average day should not be more than 167, right? So I go long on the NASDAQ, moves up, pulls back, pushes up, I add one, move my stop to break even, news event happens, it flies up to 3K profit. Failed. Well, it's not a fail, isn't it? It's not a pass, because I can't pass, because I've done 3 grand's worth of profit. If I hit target in 1 day, can't use it. It's really hard to pass those, a daily goal. So what they're saying is you've got to be consistent for 12 days solid. You mean my strategy has to go solid for 12 days without... Not going to happen. They know that. This isn't good. I wouldn't like this at all. Top Step's so easy to pass, especially at the moment. I mean, you can't not pass a proper valuation. If you press the short button on the NASDAQ, yeah, and put a 20% ADR stop loss on it, you will have passed multiple times in the last 2 weeks without even breathing. But 12 days is too far. Oh, hang on. You can set a loss limit as well. Yeah, but look at the cost. Right, so Top Step. Hang on a minute. I'm just setting up the same as Top Step's evaluation. So 2 grand max loss, 5 minis. 5 days is the minimum. Oh, okay, hang on. Right, okay, so you can tit about with it. Pass and go live, practice only. Okay. Right, so that's the Top Step evaluation. End of day drawdown. Static drawdown would actually be nicer. Puts your goal up by 500. So basically, I've got to do 3.5 grand profit. So the profit target is $500 more than Top Step, which is okay. Takes 3 days more to pass, but the consistency goal is 700. So it's half. So basically, if you compare this to Top Step, right? Just as a quick comparison, Top Step's going to cost me $49. This cost me $339. Yeah, it's 10 times the price. it takes me twice as long to pass it. My maximum daily allowance is 50% lower than Top Step's. So I cannot have lucky days. I have to have 700 days. So when I get to 700 profit, I have to stop. On Top Step, I can go to 14, 1500 and stop. I can trade the same amount of contracts. I've got to go $500 further to hit target on the same amount of drawdown. And there's a daily loss limit. There isn't one on Top Step. It's 2K. There is. It's 2K. Yeah. But the thing that really stands out to me is it's 10 times the cost. 10 times the cost. Yeah. 50K evaluation on Top Step is $49. This is $339. Mental. No one's going to pay $339 for a proper valuation. Or $19 for a demo account. They're free at Top Step. Yeah, it's not good. It's nice that you can configure it, but if I give myself a $3,000 max loss, I've got to do $5,000 in profit. It's relative, isn't it, really? But not for me. There's better out there than that. There's, I mean, it's either Top Step or it's the funded trader, not the funded trader. Take Profit Trader. So you look at Take Profit Trader. I mean, they're more expensive than Top Step as well, but it's instant payouts. This is the beauty of this. It's instant payout. 50K account is 170 a month. Way more expensive. No daily loss limit because Top Step removed theirs, so they had to as well because they weren't competitive. Profit target is the same. Drawdown is the same. End of day, same as Top Step. 6 contracts, you get 5 with Top Step. But it's more expensive. But they pay you out day one, 100%, whereas Top Step pay you out 50%, and you've got to have 5 days where you're over $200 profit. So this has an advantage in payouts. Top Step is more difficult to get paid out, and you've got to trade 30 days before you can do 100% withdrawal. With these guys, you pay more for the privilege of withdrawing on day one, and there's no consistency. So compare this and Top Step to this, no competition. This is just nowhere near. It doesn't even touch the sides. And, you know, this is half the price as well. I mean, you can't even buy anything more than $360 here. Oh, but this is a one-time fee, isn't it? Mind you, so is Top Step. Because once you're funded, you don't pay. I don't know. I can't see the appeal. Evening outro. 5 is the min on it, I believe. Yeah. Only thing with Top Step is they don't have Eurex. No, they are introducing it. They will have the DAX soon on Top Step. They don't have Eurex here either. You can't trade. You can only trade US futures. CME. Where's the indices? Equities. So you got Dow, S&P, NASDAQ, Russell, minis. Yeah. Sorry, don't like it. Just no comparison at the minute. Top Step have got it milked, and these guys as well. The beauty of this is it's fast payouts, but it does encourage you to gamble because you get paid out straight away. But look, minimum days until first withdrawal, 0. Withdrawal is immediate, which is fine. But everything else is pretty much the same. The draw is that you go straight to a live account instead of sim funded. Yeah, but Brian, who cares? I couldn't give a monkeys if I'm not trading real money. It doesn't matter, does it? That's the thing. With Top Step, you go from evaluation to a sim funded account, which you can withdraw money from. Whether that is live money or sim money, I don't care. I get paid. If this company says that they are taking you straight into a live funded account, I still get paid. Doesn't matter what it is, does it? Whether it's a demo, whether it's live, you get called up into Top Step live after you've proven yourself for 30 to 60 days, and then you're trading their capital. But like 10 people get there. It's a handful, isn't it? Doesn't matter. I'm happy to be paid by losing evaluations. I don't need it to be real money. Doesn't make any difference. Is it? Look at Tradeify. Another one, is it? There's hundreds of these. Job management software. Tradeify. Oh, there you go. $500 one-time fee. Who's going to pay that? Why would you just straight to sim funded? Oh, here we go. There we go. Right. So advanced profit target 3K. Oh, right. So you can go straight to a funded account. So this is skipping evaluation. Trailing drawdown. That won't work. Can't do that either. Trailing max drawdown. So basically, if you start at 0 and you go up to 1500, and then you come down and you go $500 into drawdown on the day, and then you trade it back up to $1,000 profit, it's a fail. Bollocks, is it a fail? I made $1,000. It's con, that's what it is. You will fall foul of that every single time. End of day drawdown. You just said you got a trailing max drawdown there, and an end of day. Like, it's just so confusing. Minimum days to pay out 10. You will have blown one of those by then, and you got a consistency rule. Too hard. Top Step's the way forward. It's the only way. Just go to Top Step. Immediately, as soon as you get a funded account, 5 contracts long. Go make a cup of coffee. Come back half an hour later after you chatted to the wife for a bit. Sit down. You're in $5,000 of profit. Shut it down. Do it again the next day. Do $200, $200, $200, $200, and on day 5, press withdraw and take half that money. Done. And then if you want to treat it like a proper account, do that. But that's the way to make money out of prop. Flip a coin. It's 50-50 shot of making $5,000. You walk into a casino, it's exactly the same. Take profit and Blue Knox is all I'm using at the moment. Instant payouts, yeah. Take profit should disclose that you need to be above the buffer on your account before you can withdraw. Yep. Same as Apex. It's all hidden in the small print. You can have all of your money after you've made $5,000 and you're 30 days into the account. If you can hold it for 30 days with a trailing drawdown, you can't. Because there isn't a strategy on the planet that isn't going to eat that trailing drawdown at some point. It's going to get you. I don't know. Prop, I'm just not. I love it for fun, but it's not consistent. Can't live on it. It's the trouble. Mind you can't live on much at the minute. Everything's a bit tricky at the moment. ADR, we've bounced off on the Dow. NASDAQ is holding. We're back up on the NAS. Pre-market lows held. Globex low today, getting rebought. And I'm stuck in the FTSE. So there we go. That's the date. So I can't really get any more out of that today. That's all done. Right, I'll be back tomorrow for the member stream, and we will have a play with the other strategy that I talked about today, which is the breakout. So I'm just catching up on chat. I think I've missed a load, haven't I? That is awesome. We'll try a 7-day demo of version 2, or if you need a beta tester, we can do a 7-day demo if you want. Something for nothing new I just got after everything for pos trading on my MT4 and just got crushed. Yes. Timing is everything, noob. And yeah, you timed it about as wrong as you can in the last 5 years, yeah? So in the last 5 years, if you go back and look at my streams for the last 4 years or so on YouTube, you've timed it at probably the worst point, not probably, the worst point in the last 5 years in this industry. These moves are just mental. It's like learning a new job, and on day one, getting a job, sitting down at your desk and being told that AI has made your desk obsolete. Thanks, I just trained for 4 years to do this. I feel really sorry for anybody that is at college or university right now learning to code. You're stuffed. It's not going to happen. You're not getting any jobs. That's basically what you've done, unfortunately. I think make trading great again merch would be awesome. Yeah, that's not a bad idea. Can you move the slides to change? Thank you, I've been for that. So I'm just going through the chat because I think I missed some people out. No, I didn't. There we go. A nice tool to use for padding the personal account. That's how I see it. Yeah, exactly. That is exactly how I use it, Brian. It's something I do every now and again to keep me entertained. I used to do a lot of it when the markets were quiet. And then I would do it in the live streams because the markets are quiet. And I would make money out of it sometimes, but it's not something you can do. You can't rely on it for consistency because the rules are set up in a way that this here, for example, look at this P&L. This is a perfect example that this strategy absolutely kills it. Has done for decades. Yeah, it's nothing new. It's the opening range breakout strategy. Tony Grabel made it up years ago, right? Absolutely killed it. We started off with 2.5 grand. We ended up with 6,118. Yeah, awesome. 12 months. We 100% plussed our account. We took 18% drawdown. Can't do it. Prop do not allow that to happen. They know that will happen. Every strategy that makes money has losing streaks. They know that. There is no strategy on the planet that is not going to lose at some point. Therefore, they make you stay as long as they possibly can before you get paid. Even Top Step, yeah? So in Top Step, let's say you take 3 evaluations, take your first payout, which is 5 days. So let's say you've taken 2 to 3 weeks to get to that funded account stage where you've got your payout, right? You've then got to trade for 30 days. So you're probably going to be in that account from day one, starting trying to get past, to 30 days. You're probably 60 days before you get to the point where you can make 100% withdrawal on that account. In 60 days, yeah, so let's call it a quarter. 4 times a year, your strategy is going to do that. You won't get the payment. There are so few people that make it to 100% payment. I did it. Yeah. With Top Step, I withdrew last year, end of last year, did the account, did it on stream, got paid, blew it. 2 days later, 2 days after being paid, blew it. Hit, just went wrong. Just went wrong for days. And that's it. I hit the drawdown limit. Start evaluation, pass next day. Not next day, but next week, because the conditions went back to being right. Yeah. Every single one of those is a blown evaluation or a blown account, or a blown funded account. Yeah. Maybe. Maybe. Probably. If not stagnation, you didn't get paid for a month, did you? You didn't make any profit. Definitely. 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 Can't see it's behind my head. Pretty much definitely. So there's 1, 2, 3, 4, 5. I would say 6 either failed evaluations or blown accounts in that P&L that doubled the account. They know that. They know this is how you make money in the markets. They know that this model they have means that you will never get it. So let's call it $500 an evaluation, $500 an account, times 6. You've got nothing. They've got that. Dick. It's a brilliant business model. And it's very, very, very appealing in the way that it works. But if you try and do it for a year, you will suddenly realize it's a zero-sum game at the end of the day. Use your own capital. It's the best way to make money. Anyway, I'll leave you there. I'm going. I said I was going ages ago and I haven't gone. I'll be back tomorrow morning, member stream. Anything else you need, I'll be in Discord. Friday, we're back for the morning session. We'll be trading the DAX and the FTSE. Yeah, hopefully I'll have the new version of ORB out by end of week. And then obviously you can start using that if you want to. All right. Okay, so anything you need, let me know. Other than that, I will see you next time. Have a good day.